As things stand right now. We've got the management of Kalpataru Projects now joining us. Fourth quarter was an operational miss for the company, and they missed their FY24 revenue growth guidance. Order inflow, though, remains strong. Mr. Amit is with us. He's Director Kalpataru Projects. He's joining us. Amit, good morning. Good to have you with us here. Thank you for your time. Prashant this side. So the revenue growth guidance of 25%, which was anyway trimmed lower from 30% earlier. Right. So there is a big miss which has come in there. Could you tell us what were the key reasons for the miss on top line? The growth came in at 20%.
So Prashant, I think on a large base, we were trying to get to a 25-30% revenue guidance growth for the year. And whilst we did 20%, it's not alarming because we had a large project in Australia, which we had, we were L1 on, and that project did not come to us for strategic reasons, and we dropped that project, and that led to a little bit of a revenue which that was to contribute, and plus a few supply chain issues. But for the large part of it, yes, we did get 20%, and if that would have come, we would have had 30% as we had guided at the beginning of the year. But given the fact that we have a strong order book, I don't see that as a challenge for us going forward.
So this you dropped the project in Australia, which you were kind of sort of accounting for in your calculation.
So that project was accounted. We had put that in the Q2 of last year. So we had some statutory reasons because of which that project did not go through for us. And that revenue which could have come from there potentially did not come. So, for the rest of it, we were on track and, with the 20% growth that we had planned.
Right. What's the guidance for FY25 on top line, Amit?
So we are looking at, 20% growth again for this year. And I think given the fact that we have a 2 years plus order book and the order pipeline across most of our segments looks very, very solid, I think we should be getting a 20% growth for FY25.
20% for FY25. Margins, though, came in line at about 8.3% within what you're guided for. But the environment for commodities seems to be very strong. I mean, outlook for commodity prices, copper, etc. What's the can you guide the market on the margin front as well for 25?
So, I think the last few quarters, we've been trying to impress upon the market, given the huge sectoral diversification that we have. For us, whilst we will be in the range of 8.5-8% at EBITDA level, I think a better parameter to look at our company would be more from a PBT perspective. And we've said at the beginning of the year last year that we'll be at between 4.5-5% at a PBT level, and we've been in that range. And I think this year as well, our guidance is towards the higher end of that margin and get to 5% PBT at the end of the year.
Sorry, 5% FY25 PBT
Correct.
Margins. Okay, got that. Now, consolidated net debt fell by 25% quarter on quarter to about 2,600 crores. Net debt in the core EPC business stands at about 2,017 crores. From here on, could you tell us, do you have further debt reduction plans and how will it go? What will the number look like in FY25?
So I think, Prashant, if you look at our last year's performance, our debt levels have remained the same in spite of having a 20% growth in our business in terms of revenue. I think for next year as well, we do not anticipate any significant increase in our debt. And we are keeping three main parameters to keep in check. If you look at our debt to equity ratio has remained at 0.55 at a standalone level, and we may intend to maintain that, if not go lower. Our net working capital days were at industry best below 100 at 99, and we intend to keep that for FY25 as well. Our interest cost as a percentage of revenue has been 2% or thereabouts, which again is one of the best for a company of our scale and size. And we intend to keep that as our guiding factor also for growing in next year. So if you look at these three things in play together, I think it gives you a clear picture on where our debt profile will be for the financial year FY25.
Right. Amit, could you give us a sense of what the order book now is, backlog is, and give us a sense of the quantum of orders you expect to take in FY25?
So, Prashant, we've got a current order book as we stand at in excess of 58,000 crores, which is an all-time high for Kalpataru Projects since inception. We have an additional L1 of around 5,000 crores. So we have a more than 2 years order book as we look at it today. I think guidance for next year will be, whilst we are bidding in all our sectors, the opportunity set looks very, very healthy. But because there's elections going on in the country, and hopefully by July we'll have more clarity on how government intends to have their capex plans, outlined. And I think we should, towards the end of Q1 or beginning of Q2, will be better placed to give a guidance, whilst we don't see any, challenge both internationally and in India across all our segments to win orders. But I think we'll be able to give a better picture at the end of Q1 once we have more clarity on the government outlay.
Okay, no, that's fair enough. So maybe 50,000 crores now, additional L1 of 5,000 crores, and you're saying maybe the full kind of guidance perhaps by the once the elections are over, essentially, is what you're saying.
Right.
There has been some moderation on the international side, moderation in Saudi capex. We've heard this from other companies, etc. as well. Could you see some impact there? What proportion of your book constitutes of orders from Saudi Arabia?
So today we've got close to 10,000 plus crores from Saudi Arabia between our segments of oil and gas and T&D. So whilst for I don't know about other companies, for us, I think Saudi Arabia oil and gas market looks very, very promising. They've got a huge program to change what they call, to cover liquid with gas, as a result of which a large capital outlay is planned for the next 5 to 6 years in the ONG segment. And I think that's what our focus will be in Saudi Arabia, whilst we will look at transmission opportunities with attractive margins. Our focus is in oil and gas, specifically with Saudi Arabia, which we've invested over the last 4 years in terms of building capability, people, teams, and BD expertise. And now that's fructifying into order wins. And that looks robust for the next 3 to 4 years.
Got that. Amit, good conversation. Thank you very much, and hope to speak with you post-elections maybe, and you'll give us a better sense of what the order inflow looks like for Kalpataru project. So that's the management coming in there. Stock's down about 2% or so.